Hello and welcome to Trade Talks. My name is Yogesh. With new risk from the trade war, stocks head into the final weeks of summer vulnerable to a pullback or even correction. President Donald Trump has been agitating for the Federal Reserve to push interest rates even lower. His latest gambit to extend tariffs to all Chinese imports might just do the trick. The president on Thursday threw a hand grenade into US and international financial markets by threatening to add a 10% tariff on virtually all Chinese goods in September unless trade talks make more progress. The Dow Jones Industrial Average and S&P 500 extended their losses in Friday trades, and the yield on the 10-year Treasury fell by 2.6%. The market was down sharply in the past week, buffeted first by the disappointment over the Fed's more hawkish than expected policy outlook. Then they were beaten down by fears President Donald Trump is starting a new front in the trade wars with China that is unlikely to end anytime soon. The Fed cut already low US interest rates this week mainly because it is worried about the ongoing US conflict with China over the trade rules. The clash between the world's two largest economies has blunted the global growth and undermined key segments of the US economy such as manufacturing. The quarter-point cut in the Fed funds rate to a range of 2 to 2.25% wasn't enough for Trump. The president blasted Powell and the Fed and said the central bank should have signaled further rate reductions. No matter, Trump has often used threats as a negotiating tactic, and he clearly doesn't want the trade dispute to drag on through the 2020 election and shadow the economy. The Powell Fed, on the other hand, appears to have limited its own flexibility by tying the possibility of rate cuts to the outcome on trade talks. Wall Street now expects another rate cut at the Fed's next meeting in September. While the tariff threat should not be discounted as a bluff, the Trump administration is clearly trying to kill two birds with one stone, reaching a trade deal with China and forcing the Fed to cut interest rates. In short, Powell can say all he wants that the Fed doesn't respond to the political pressure, but that's exactly what it's doing. My advice to the investors: the only game in town remains the trade skirmish and how that feeds into the Fed's reaction function. Please diversify your portfolio and do not stick to only one asset class. Manage your risk properly and please keep your Twitter account active. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to this channel. To know how to make commodities as a part of your portfolio, register for our weekly seminars and webinars on www.century.ai. My name is Yogesh and you have a great week ahead.